Till then, how is the preparation going on, guys? And I'm sure you guys are in full swing for 2024 examination, be it May or be it November. I think most of you guys are writing in 2024 and some of them could be writing in 2025. This May 24 being the first attempt for new syllabus, I'm sure we will get a lot of inputs post the examination also. So I think the issue also got fixed up, I guess.
Yeah, I think it's connecting.
November. Yes, yes.
Yeah,
We are
yeah.
writing in
Yes.
2020. Very worried for IBS. I think, Govind, your question will be answered very deeply. Don't worry. We'll talk in keen about it.
Yeah, so Yogita, can you try sharing the screen now?
Yes, yes. Let me try. One second.
Yeah, I think now you'll be able to share.
Okay, let me check.
Hi.
Are you able to see my screen though?
No, we're not able to see.
No, we're not able to see.
Okay, one second.
Just a second. I think there is an issue at my end. Just a second. Just give me. So this is the first time, we are coming live together. So some issues which we need to, if it's a single person, then, everything is possible and it is easy to handle.
And all three guys right now are sitting in 3 different places and connecting with you guys. So I think it's worth the time.
Now, can you try sharing screen?
Yeah, now I have the option.
Yeah.
Okay. So I hope you can see the screen. So first we're going to be discussing the pattern of the paper. Okay. So so this paper has got basically 5 questions and each of the questions is going to be of 25 marks. But we don't have to attempt all the questions. They're all going to be case study based questions. They will have all the subjects included in it, but we only have to attempt 4. Okay. Now this paper is going to be a 4-hour paper. Usually we have got a 3-hour paper, but this paper is going to be 4 hours. So we can calculate it's basically 1 hour that you will need for one question. Now this is an open book paper, so you can carry as many books as you want, but we'll discuss about it. We'll discuss how many books you have to carry and how you're going to prepare for it. Okay. Now entire paper is basically 60-40 divided. So every single case study that you will get, 60% of it is going to be descriptive and 40% is going to be MCQ based. All right. So, and all the questions, they're going to be case study based questions. Okay. Now, other than that, see, the questions will be compiled of all the different subjects. But the thing is that if you study every subject in detail, you will realize that in every subject, some sections are kind of similar compared to this, same points are covered in other subjects also. So those kind of topics are combined together, they're made into a case, and then based on that, 2 types of questions may be asked. One might be a tax question, one might be a law question, something like that. So what is needed is you need conceptual understanding first of all. All right, we're going to be discussing individually different tips that you should be following in every subject, okay, based on how you have to prepare. All right. So, Surajji, should I be discussing about the?
Yeah, I think we can continue with law and then taxation, and then I'll discuss about FR and SM and some part of costing, and then we'll discuss the case study that we're going to pick up. So students, if possible, all of you can download this case study number 9 on your, if you're accessing through mobile or laptop or wherever it is, so that when we are discussing, you also have it handy and you understand what are the things to be taken care of when we are solving a case study based question, especially when it is coming from multiple different subjects.
All right. So see, in your CA final, you have got this self-paced online module also. Now it has got 4 parts. You will have 4 papers in self-paced online module. The first paper is a law paper. All right. So it's going to be an online paper. Okay. Now about this paper, I want to discuss a little bit because your preparation is somewhat going to come from there also. Every single paper in CA final that you will be preparing, it will contribute to this one paper that we are going to discuss today. Okay. So now first, let me just talk about law. So in law, the online paper, of course, it's of 100 marks. The passing mark is 50%, and there's not going to be any negative marking in it. Okay. Now the whole paper pattern. Wait, let me share the screen. Let me share the syllabus for your CA final self-paced module once again. एक second.
So till the time, Yogita
Yeah.
shares it, what students, as and when you have some doubt, please keep a note of it. And, you can ask those doubts. We'll have specific doubt addressing sessions. Means during the session itself, we'll give break for doubt. That point of time, if any doubt you have, you can actually clarify it. Okay. Because together when we discuss, we will get more clarity. And the more questions you ask, the more clarity each one of you will be getting.
All right. So can you see the screen?
Yes, we can see.
Yeah. So on the screen, we can see the self-paced online module, which is corporate and economic laws. Okay, now the whole paper is divided into two parts. The first part is company law, which is going to be a total of 70 marks. Okay, out of which A part, which is company law entirely, that will have 50 marks. Then we'll have security laws, which is 20 marks. Okay, that's part B. And then lastly, we'll have economic laws, which is going to be 30 marks. Okay, now it is going to have a Foreign Exchange Management Act, FCRA, Insolvency and Bankruptcy Code. Now, in security law, we'll have the SEBI Act and the SEBI regulations. And then company law, we'll have section 149 onwards. 1 second. I think my video is paused. I'm so sorry.
Yeah, no problem. Yeah. Okay.
Yeah. So in the company law, we are going to have section 149 onwards till the entire Companies Act. Okay. This, of course, you will have to study nicely in order to clear the self-paced online module. But along with that, if we are simply talking about the current paper, okay, then we not only have to study this entire subject of CA final, but we will also have to have some knowledge of the company law that was covered in our CA Inter as well. Because some of the questions that are covered in our case study, the suggested case studies that we are going to be discussing that are given by the institute, they have got some questions from CSR also. Now, CSR is not covered in our CA final syllabus, but it is covered in our inter syllabus. So we will still have to have some knowledge from inter syllabus also. And of course, you will have to nicely prepare for the self-paced online module also. Okay, so we'll have to brush through the concepts, and then we are going to go into individual tips and tricks maybe by the end of the video as per sir suggests. Accordingly, we'll have to prepare for the paper.
Okay, so one thing you would have got some clarity that it is not only CA final law, some part. Now, some part means to what extent? See, again, you don't have to read everything all over again. We will be telling you specific part that you have to keep in mind when you are refreshing your concepts. Maybe something around definitions, maybe something around limits, penalties. We'll come to that towards the second part of the thing. So over to Shiv Teja sir. So if you can give some broad thought on DT, IDT, how much and what kind of coverage they should be having.
Yeah, thank you, Suraj. Thank you. Hello, guys. Once again, a very good evening and a warm welcome to the discussion on integrated business solution. First of all, this being the paper 6, the last paper of CA final, I think Institute has very smartly planned this paper of IBS because the case studies, what I've looked at, I already looked at a few case studies, what they have given in the Institute website. The point is very clear that in every case study, some case studies are a combination of FR and taxation. Some case studies are a combination of FR, AFM and law. And some case studies are the combination where more of taxation, less of FR is involved. Now that clearly signifies to us that it is not that we just have to do one subject, but we need to have a holistic understanding of the approach of the particular content. Now, when I talk about taxation, I'll split that into two parts, your direct tax part and indirect tax part, your paper 4 and paper 5, what we're talking about. I could sense the vibe very clearly in that paper 6 of case study, wherein lot of elements, especially the areas of assessment procedures, appeals and revisions, penalties, TDS provisions, topic like PGBP and prosecution, return of income. These are the major source of areas in direct taxes which are being focused in case study. The logical reason being very clear that they are of more advanced level discussion, which the students need to have a clarity upon. And when I look at the GST perspective as such, they are focusing more on the ideology and the concept related to value of supply, input tax credit, place of supply, and we have a beautiful topic like advance ruling under GST, penalties under GST, prosecutions under GST. So the common areas in income tax and GST is your appeals, revisions, penalties, prosecutions, TDS, and the limits. These areas are being very predominantly focused in the integrated business solution paper. So when you prepare for IBS paper, it is important that you keep this limits, rates handy with you, because students keep coming to us telling that, sir, since that this is an open book system, how many books should I carry? Should I carry 10 books with me? Boss, you have to understand that even though it's an open book system, it doesn't mean that you will carry plethora of books and then just get confused in the examination. That is not the way of approach. You have to be very strategically planned in terms of what has to be carried with you, which makes more meaningful sense. And ultimately, it's all about interpretation of case study and applying that particular provision of taxation, be it direct tax or indirect tax, in that particular case study, which is of paramount importance. And that is what I clearly could sense that when it comes to direct and indirect taxes. I'll talk more in detail about one particular case study, what we are going to talk today, so that you will also get a flair in terms of how that case study is distributing between multiple subjects. So if a student has to answer a paper of IBS, he should definitely have knowledge on multiple subjects. And of course, in that multiple subject, direct tax and indirect tax both are involved. And I've seen 2 case studies where there are questions on both DT as well as IDT as well. Both were covered. And that was very smartly planned case study, which I could actually enjoy that a lot. And there are some case study where only DT was covered, some where only IDT is covered. So we really cannot tell that DT will come or more of IDT will come. Since they are going to give 5 case study, we are going to answer 4. There is a probability that there could be one case study where tax is not covered at all, and couple of case study where DT is covered, and one case study IDT is covered, and one case study both DT and IDT are covered. And all said and done, it's a combination of all the subjects put together. That's for sure.
Yeah, thanks for your inputs. I think, as I told you earlier also, DT, IDT has a good amount of weightage. And specifically for those of you, I don't know how many of you are here, you can, raise, you can, put it in the chat box. How many of you are here who have cleared group 1 already, maybe last attempt or 1 year back or 1.5 years back, and writing only group 2 in this current attempt? How many of you are here? If you can just, or we don't have anyone who in that category. So my question is, have you already cleared group 1 earlier, and now you are writing only group 2? Those of you are writing only group 2. So I have not got any response, guys. Unless you respond, you will not be able to address, because that category of student is at the maximum risk. Maximum risk category is group 1 cleared and writing only group 2. The reason I am saying risk is, those of you who have cleared group 1 earlier, you have passed FR, SFM, audit, law, and you have forgotten everything. Okay. Those who are writing only 1 group, this is for specifically for you, only writing second group. You have forgotten whatever you have learned 6 months back or 1 year back. So for you, it is very important to go back and refresh your concepts, because there can be something, if some formula comes from SFM, or if some core concept comes from law or audit, professional ethics, for example, some clause, some schedule. So please ensure you have time to write. Second thing that I want to highlight to every one of you, set A, set B is not applicable for May 24 examination. Correct? So all of you are thinking we will write set A and set B after writing May 24 examination. Okay, agreed. But the problem is, even though you write set A, set B after the examination, you have to know what is there in law, what is there in strategic cost management, if you have to clear paper 6. Very clear. So just because institute says you can write set A, set B after that, please don't ignore law and strategic cost management. And last thing, for strategic management, because if you look at the syllabus, they mentioned that they will test all the subjects of CA final with strategic management. Now for strategic management, you have to go back to your CA Inter, learn or at least revise the competitive models, the strategic management models that you have learned. At least to that extent, you need to learn, because one question they had asked about Porter's value, Porter's 5 forces. In another question, they had, I think, mentioned about 7S. So such things can come. So you have to not only do CA final, as Yogita ma'am said, you also have to go back and learn some concepts, maybe definition or something. She will, explain more on that for CA Inter. And then you also need to learn SM. Okay, so that is one part. Now coming to the core content of financial reporting, if you are writing both the groups, it will be slightly easier for you. If you are writing only the second group, you have to refresh the important standards and important concepts, which we will be discussing about. As far as financial reporting is concerned, more likely they would be testing around revenue, leases, business combination, consolidation, financial instrument, contingencies, and your intangible assets, events occurring after the balance sheet date, accounting policy changes. So a lot of these aspects would be tested in the examination, as we can see from the case-based scenarios, right? Now, as far as, for example, FR is concerned or any other subject is concerned, don't make this as a mindset that you have to learn everything and you have to carry, as Shivteja said, tons of books together to the exam hall. That is not the intention. Please understand, there are some things which you remember, you already know. There are some things which you keep forgetting. Okay, for example, if it comes to specific limits or if it comes to specific definitions. So each student, and please note, don't try to take notes or concepts which are compiled by others, because in examination you will not have time to search. So unless you yourself prepare the thing that you have to carry along with you, it will become really difficult in the examination, even though if it's an open book. For example, if I give you a 700-page book or 800-page book, take this to the exam hall. Now in examination hall, it will be difficult for you to search. So each student is different. Each student has different strengths. Based on that, you have to prepare your own core notes that you will be carrying. Okay. Now, having discussed all of this, I think it's time we can jump into the case and we can discuss the case, right? So I'm sharing the screen and we will, start discussing the case, where we will be teaching you how to read a case study, what are the things to be kept in mind, and how questions are presented. So now this is case study number 9. I hope my screen is visible. Is my screen visible?
Yes.
Yes. Okay.
Yes, go ahead.
Thanks. Now, if you look at this particular case study or any case study for that matter, one suggestion or one trick that I will give you is, especially in the exam scenario. So today we will read through the case study and we'll discuss and analyze. Specifically in the exam scenario, before jumping into the case study, quickly look at what is the questions they have asked. No need to look at the options. Just quickly look at what is the questions they have asked. Because after reading the questions, you will realize a lot of information given in the case study is just to confuse you or just to waste your time. You have to be smart. Everything in the case study is not relevant while answering the question. Okay. They will give some history. They will give some background of a company. They may give a lot of this stuff. Quickly read through and move forward. Don't waste too much of time in understanding everything, because as you saw, sorry, at the beginning, we have 1 hour per case study. In that 1 hour, you have to read the case study. You have to understand the case study. You have to remember, recall the concepts, answer, and write the descriptive answers. So to ensure we utilize our time to the best extent possible, my suggestion would be, first quickly look at the questions. Just the, maybe at least the objective type question, so that you don't waste extra time in trying to figure out what is given in the question. So now here we are at case study number 9.
Just to add on, that's a very, very, very important point what Suraj has just said, because it makes a huge difference when you look at this MCQ. I keep telling that to students a lot. If you look at that, you'll save a lot of your time. And on a very lighter note, I keep telling students that when you go to a event or a marriage to attend, and when you go to the food counter, I generally, what I do is I look at all the food which is available and then decide what to eat. so that I'll not waste time on some other counters which is not relevant to me. That was a very lighter note, but this actually means a lot what Suraj just said. Keep that in mind, my dear friends.
Sure,
Thank
thanks.
you.
I think that is one very good, example what Shivya just now given. And I think we all of us do the same thing when we go to any buffet or something. What is there, and then choose what you want.
Right.
Yes.
So now here's the case study. So the economic survey for 23-24 has been presented to the parliament. And let me tell you, whatever is given in the first, second, third paragraph is actually not even tested in the case study. Okay, in this particular case study has been presented in the parliament. According to the survey, the Indian economy, however, appears to have moved on after its encounter with the pandemic. Okay, so there was pandemic and then economy has moved on. Okay, staging a full recovery ahead of many nations and positioning itself to ascend to the pre-pandemic growth path. Now, wonderful English. Okay, very, very, high quality English, and students get scared. And what are they trying to say? They're just saying that we have recovered from the pandemic. So that is the summary from this thing. So as you read the case, these kind of summary should get inside your head. Okay, don't get scared with these fancy words. Sir, what is the meaning of this ascend, pre-pandemic growth path, all of these things? Just keep it aside. Simply, it means we have recovered, right? Then this could be possible with together everyone achieves more. This is a management concept or management acronym. The participants of this team are the central government, the state government, industry, and the people of this country. So what is the new thing there? The country has recovered, government has played its role, and we have recovered. Okay. Then look at the English. Huh? We are writing a CA exam, and this English is like a CAT level English. Means the common admission test what we write for MBA. There has been a tectonic shift in the policies of the government. Tectonic shift means shifted by a huge thing. So this is basically related to earthquake. Tectonic is related to earthquake. Tectonic shift in the policies of the government. The emphasis of the present government has been to stimulate entrepreneurship so that more and more people become job givers rather than job seekers. So now here in this particular paragraph, what we can understand is government wants more entrepreneurs so that more jobs are created. Okay, then this has also resulted in providing impetus and encouragement to the youth of the nation to pursue their entrepreneurial dreams. Now, this is something you can link with more and more startups coming up, more and more businesses coming up. One such case of entrepreneurial dreams is of Manu and Tanu, two friends who always aspire to have their own business when they complete their education. Guys, please don't use annotations. It will be difficult for me. Right? Thank you. One such case of entrepreneurial dreams is of Manu and Tanu, two friends who always aspire to have their own business ventures. They both completed their MBA from top business schools in India and were working in large corporates with big pay packages. So earning lots of money, now want to start their business. You'll be surprised to know a lot of these is not even relevant to answer the questions. That is what I was trying to tell when you have to smartly read and retain only what is needed. Whilst they always wanted to pursue business ideas, nothing came their way which enticed them to start their entrepreneurial journey. This basically means they didn't get any ideas so far. Meanwhile, Manu who was interested in economic policy and defense-related matters, came across a write-up which described the shift in the policy by the present government in defense sector. The new policies emphasized on giving priority to the indigenous market players and reserving more than 500 items for domestic manufacturing was a lucrative business chance. Now here, what they're trying to say is government is now, instead of, so maybe government earlier we used to import a lot of defense related part. Now the government is saying you don't need to, we'll give reservation for 500 items, means only domestic companies will be able to supply these to the government. This becomes a business opportunity. Now, though in this case study, they have not, asked questions much on these preceding paragraphs. This is something which is related to strategy, opportunities, the opportunities part, what we learn in strategic management, that is what is being highlighted here. The political factor, the legal factor, the environmental factor, the pestle framework that we learn, all of that is tested here. Though Manu and Tanu were in contact, it had been a couple of years since they met. Manu met Tanu and discussed the idea of business potential in defense sector, how they could start. They believe there is a lot of scope in domestic as well as global market if they could manufacture the ancillary items used in defense equipment. Now, this is the background, how they started the business. There may be a question in the examination which will ask you the external environment, the PESTEL framework, the competitive forces, related aspects, but here it has not been asked. Okay. So now they've incorporated a company now, which is more of a law matter. So, Yogita could continue from here and explain or help you understand how to read this case study. And please remember, as you read one paragraph, put the essence of it. What is the essence of that paragraph in your head, so that while answering the MCQs, it will be easy.
Okay. All right. So you can look at the screen. I'm going to read from here, I think. So do I have access to this? Like, can I write on this?
You can annotate on it. Yeah.
1 second.
Or if you want to share, you can share your screen and you can.
Okay, no, so I'll read from I have my notes here. Okay, so I'll read from here and you guys can look at the screen.
I'll highlight it here.
Perfect, thank you. All right. So having realized their true calling, both resigned from their high-paying jobs to start their own venture. Okay, so this is now their new dream. Okay, so they've left their job and now they're starting their new venture. In 2021, they incorporated a company called M&A Private Limited. Now here, see, from here, the main part is going to start, the relevant part. So we have to understand the main things and we have to highlight them as we are reading along. So here, M&A Private Limited. So it's a private company. It's relevant detail. Now, when did they incorporate? Okay, they incorporated in 2021. So these are important details. Keep highlighting them as you read along. With both of them being the shareholder and directors of the company. So both of these people are also the shareholders and the directors, right? Gradually, when the business started growing, they bought in Shyam as the shareholder and director. So now we have got 3 people. Okay, so we've got Tanu, we've got Manu, and then now we have got Shyam also, and all 3 of them are shareholders as well as directors. Presently, Shyam is holding 12% of the equity share capital, while Manu and Tanu hold 44% each. All right, again, this is important detail. We can highlight it for ourselves. The company is able to fund its operation internally without seeking any outside funds, which basically means that this company does not have any loans. This company is self-funded. So the shareholders themselves have added the funds. That's it. All right. As both Tanu and Manu had business acumen and strategic vision, they wanted to rely on a professional who can guide them on accounting, law, and compliance matters and give expert opinion. So basically, they did not know everything. So they wanted to add in someone else as well. Okay. So they brought in a CFO. Now, who is this CFO? They appointed their long-term friend and tenured financial professional, Azim, as the CFO of the company. Okay. So now we have a CFO also. We can highlight this. It might be important. We don't know. During one of the board meetings, while briefing about the audit status, the CFO informs the directors that the financial statement for the current year would be prepared as per the Indian accounting standards. In the audit kickoff meeting held in March 2024, the following points were discussed by the CFO, while Tanu and Manu added their insights. So now we are going to be discussing some details that were discussed in the board meeting. All right, let's start off. So here I think Shiv Teja sir is going to take up.
Yeah.
Thank you, Suraj, and thank you, Yogita. So friends, I think you got the basic structure about what Tanu and Manu were trying to do. And we have to just get that insight there that Tanu Manu has started off together. And in between, Shyam has entered with 12% share. And those 2 guys were having 44%. And 12% was there with Shyam. And post that, they brought a CFO to ensure that there's a professional expertise there. This is a summary of what we just discussed. And you should also keep in mind that this company is a private company. That point has to be kept in mind because lot of taxation provisions will apply to private company, and if it is public company, lot of provisions will not apply, because in taxation we use the word company in which public are substantially interested, company in which public are not substantially interested. In simple terms, a company in which public are substantially interested is nothing but a public company. A company in which public are not substantially interested is a private company. And in this question, they told that this company is a private company, which clearly signifies to us that this company is that company in which public are not substantially interested. There is a strong reason why I told this point. Now let's look at the first point. Shyam is a director on the board of directors and holds 12% equity shares of the company. Fantastic. What is the percentage? Let me highlight that. 12%.
I'll highlight that.
Yeah, thank you. So how much percent he's holding, my dear friends? He's holding 12% equity shares of the company. As Shyam had some financial emergency, Tanu and Manu wanted to support him by giving a loan of 5 lakhs. Till there, it's fine. Tanu and Manu, they wholeheartedly want to support Shyam. That's good. But the problem here is Tanu and Manu wanted to support him by giving loan of 5 lakhs from the company. Here comes the problem. The moment we say that a company in which public are not substantially interested is giving loan to a shareholder who is holding 10% or more. How much percent is holding? 10% or more. If he is holding 10% or more and that loan is given to a shareholder who is holding not less than 10%, that is 10% or more, then that loan will be regarded as deemed dividend, my dear friends. What do we call that as? It is regarded as deemed dividend. And let me tell you, my dear friends, this point is given by Section 222E of Income Tax Act. Section 2, Clause 22 and Subclause E of Income Tax Act clearly specifies that any loan or advance given by a company in which public are not substantially interested to a shareholder who is holding not less than 10% of voting power, that loan or advance shall be regarded as deemed dividend. Moreover, my dear friends, in order to highlight you, let me also tell you, if that loan or advance is given to a concern in which that shareholder has substantial interest, that is also regarded as deemed dividend. Substantial interest means holding 20% or more. Any which ways, here loan is not given to the concern. Loan is directly given to the shareholder who is holding not less than 10%. So without any second thought, that amount of loan which is given to Shyam shall be regarded as deemed dividend as per Section 222E. Now, sometimes there is also a probability where they might add one point and tell that what if the loan is repaid. Let me tell you, even if loan is repaid, still it is regarded as deemed dividend. So that's the first part of the story. Second, CFO mentioned that company had accumulated profit of 7.5 lakhs on the date of loan to Shyam. That's important because it is regarded as deemed dividend only to the extent of accumulated profits. If there is no accumulated profits, it is not a deemed dividend. Next, it is pertinent to note that Shyam is also a partner in Shyamlal & Co. with 30% profit sharing. That means it is a concern in which Shyam is having substantial interest. And during the current year, company has made advance of 2 lakhs to Shyamlal towards procurement of materials. Normally, if loan or advance is given, it is regarded as deemed dividend. But here it is something like a advance given in the ordinary course of business, which is very clearly a business advance. So that business advance, my dear friends, will not be regarded as deemed dividend because it is very clearly a business advance that has been given. Next point. Second point. Company also purchased goods from entity registered under Micro, Small and Medium Enterprises Act. In short, we also call it as MSME Act. CFO of the company provides the following information of trade payables to micro and small enterprise. And not due, 7 lakhs, of which 3 lakhs are disputed. Due less than 1 year, 12 lakhs, out of which 2 lakhs are disputed and in arbitration. 1 to 2 years, 3 lakh disputed. More than 2 years is nil. And that's the status of the payment payable to the micro and small enterprises. And during the year, company paid interest of 2.5 lakhs. Let me highlight that word interest, which is the key here. How much is paid is interest of 2.5 lakhs in terms of Section 16 of Micro, Small and Medium Enterprise Development Act 2006. And 1.5 lakhs were paid beyond the appointed date, and interest due of 10,000 was not paid. Here there's an interesting catch point, my dear friends. We have an act called Micro, Small and Medium Enterprise Development Act. And in that act, there is a brilliant section called Section 23, which clearly specifies that any interest which is payable or paid by the buyer, any interest which is paid or payable by the buyer to an enterprise which is registered under MSME, that amount of interest will not be allowed as deduction. The moment section 23 says it is not allowed as deduction, it is as good as penal in nature. And we all know that in section 37, general deduction, law clearly says that if any expenditure is incurred which is penal in nature, that we cannot claim it as deduction. So basically this point they are talking about to understand whether that interest which is paid, we can take it as deduction or not. So that's the story of this second part of the question. And I think third point is related to law, I believe.
No, so that is, I think, related to acquisition. I'll cover that. But just before we move to the third point, one more thing you have to keep in mind when you're reading point number B is that these kind of disclosures, whatever is due to MSME, that you need to disclose as per Schedule 3 also. So just think of it, no? Law gives a provision that you have to follow Schedule 3. Under Schedule 3, you have to give these disclosures. And the same thing, here there is a taxation angle. And in fact, from I think 1st of April of 24, we have this 43B subsection H, if I'm not wrong. I don't know.
Correct, absolutely.
I'm not a tax expert, but there is
yes.
a lot of hue and cry about, after 45 days, if you pay, that will not be allowed. So, same. See, in this B itself, we can ask a question from law. We can ask a question from, financial reporting. Of course, financial reporting is based on law as far as Schedule 3 is concerned. And also from the point of view of taxation matters, right? So, these are the things. So, now, in this particular case, they have asked a specific question. But from the same point, they could ask another question also. So, the moment you read this, there should be something which should trigger in your mind that, okay, this will test us on this particular aspect. Or as soon as I'm reading this, Schedule 3 should flash, section 43B, section 37, what sir mentioned, all of that should flash in your mind. Now, sir, is it important to remember sections? Yeah, please.
Just last line to add is that, so basically what is the whole point, what we are trying to say is that the moment you read one particular point, the thing related to FR, the thing related to tax, the thing related to income tax, all things should start popping up in your mind. That's most important.
I wanted to make a point.
Yeah.
See, the next question would be like, how are things going to pop up in my mind? The thing is, I realize that most of the questions that are coming in the case studies are also the past exam questions or the topics that have been covered in past exams. So if a student just wants to practice whether they can understand the concept or not, they can simply, check the past exam questions. They'll understand important topics, they'll understand case studies, and that will help them, to understand where the topics are coming from.
Sure. Now, moving on to the next part, which talks about an acquisition related aspect. So here we have M&A Private Limited acquired 100% of shares of another company, P&T Private Limited. Now tell me, in financial reporting, when you read this, which Ind AS comes to your mind? I know for law and tax, section numbers may not be easily, recollectable, all the sections, but at least which Ind AS comes to your mind when you hear this or when you read this, that there is a business acquisition? Can you just put it out in the comment box? 103 and?
Excellent.
103 and 110. Very good. So you have to keep these things also in mind, right? The negotiation for this acquisition commenced on 1st of January of 2003 and the agreement was finalized on, just a second, please slightly more. Yeah. The negotiation commenced on 1st of January. Agreement was finalized on 1st of March. While M&A Private Limited obtained the power to control P&T Private Limited's operation on 1st of March 2003. So we know the most important part is control. So control is 1st of March. The agreement states that acquisition is effective from 1st of January and that M&A Private Limited is entitled to all the profits after that. Whether we are entitled to profits or not is an independent part. When are we controlling it? That is very much important. The purchase price is based on P&T Private Limited's net asset as on 1st of January. Whatever is the case, we have to see on which date did we get control. And based on that, we will do acquisition date accounting. That is the first one. Okay. Consideration was made on 1st of May. Then we know, if it is a deferred consideration, we have to, it's only 2 months, so there is no need to discount. Whenever is the consideration paid, for us, the relevant date should be 1st of March. M&A Private Limited also holds 70% stake issued share capital of Sage Limited and 45% issued redeemable preference shares. So, in another company, 70% equity means there is control. That is 30% non-controlling interest. 45% of redeemable preference shares, which we own, 55% is non-controlling interest. This acquisition was made on 31st December 2003. Please be mindful of the dates. Okay, we are doing March 24. So it's on 31st December 23. So we have to be very careful as to which dates are we referring to. Then issued and paid up equity and preference share capital on 31st March of 23 is 15 crores and 5 crores respectively. Balance in the statement of P&L for the year ended 31st March 24 is 25 crores. All the book values of assets and liabilities were same as their fair values, except for an item of property, plant and equipment. The carrying amount at the time of acquisition was 3 crores and its fair value was 6.2 crores. No adjustment of fair value has been done in the books of CG Limited. So this is a standard question. If you have done Ind AS 103 and 110, this is a standard question which comes where you have to calculate the net assets, the pre-acquisition net assets, then what is the goodwill, what is the non-controlling interest, what is the post-acquisition share. All of that is here. So depending on what the question is asking, we have to solve. Right now, again, we come back to point number E, which is a law-related matter. So Yogita would be taking it up.
Yes. So Anu is also a director of an M&A Private Limited who was going to the world tour for a period of 5 months. Okay, so far we knew that there were 3 directors, but now there's one more person. Anu is also a director. Now she is going for a world tour for 5 months. In the absence, he wishes to appoint his friend Kumar as the alternate director for M&A Private Limited on his behalf. Okay, so this Anu, it's a he. Sorry, I thought it's a she, but okay. So Anu is a he. Anu wants to appoint someone as the alternate director. Now, as you see, alternate director, this word itself should click in your mind that it's a law-related question. We have studied alternate director in section 161 of the Companies Act. Okay, so now this person who's the director, they themselves want to appoint another person as the alternate director. Is it possible? Okay, so the next line says the article of association of the company allows the appointment of alternate director. Now, section 161, if you remember, if you don't remember, you can go into the book and you can check it. It basically says that the board of directors have got the power to appoint alternate director. The director who is leaving, they do not have that power. Okay, an alternate director can be appointed if the original director is going for 3 months or more. They're vacating the company or they're going out of work for 3 months or more. So here we can see clearly that Anu is going for 5 months. So that condition is satisfied. But here Anu wants to appoint on his own behalf another person. That is not allowed. So in case a question comes ahead, we need to remember that. All right. So moving on to point F.
Yeah, so again, back to point number F. So just, they've given individual small bits related to law, then tax, then FR, then again one more on FR. M&A Private Limited enters into a 7-year service contract with a customer NP. The moment you see service contract, customer, Ind AS 115 should come back to your mind. Now, with this point, I would like to explain how you should, handle the aspects that you need to revise before the exam. Now, when I say Ind AS 115, no need to learn everything from beginning till end. Know the 5-step model, know how do we allocate the consideration, learn about maybe variable consideration, then maybe service concession arrangement. That is a very important part. So only areas which you find tricky, see, rest all are concept based. Rest all are based on concept of control, whether you have transferred, not transferred, all of that. Wherever there is a core content where you feel this part is confusing, I may forget, those parts you can make a note of it separately. M&A Private Limited enters into a 7-year service contract with a customer NP Limited for an amount of 21 lakhs, that is 3 lakhs per year. The standalone selling price for 1 year at the inception of the contract is 3 lakhs per year. M&A accounts for the contract as a series of distinct services. At the beginning of the 7th year, the parties agree to modify this. Now here there is a modification of the contract. The fees for the 7th year is reduced to 2.7 lakhs and NP Limited agrees to extend the contract for another 7 years for 16.8 lakhs. That is 2.4 lakhs per year. Standalone selling price for 1 year of service at the time of modification is 2.1 lakhs. Now, this itself is a very complex scenario. Now, we will see what kind of questions have been asked. So, we'll take the MCQs first, and then we'll broadly discuss descriptive. The detailed answer of descriptive, we can definitely refer to the case study. We will tell you how to handle this. Now to summarize whatever we have done so far, it has taken us about 40 minutes. But in examination, you will not have 40 minutes time to read this. The entire reading, I think you should be able to finish in about 10 to 12 minutes. Important points should register in your mind. And as I suggested, first read the main questions of the MCQ so that when you are reading the case scenario, you are able to search the answers beforehand. Okay. So now the first question, it's a tax-based question. So over to you, Shivteja, if you can discuss the question, and then we'll move on to the other questions post that.
Yeah, sure. Thank you. The CFO says that the tax auditor wants to treat the loan of 5 lakhs to Shyam and advance of 2 lakhs to Shyamlal and Co as deemed dividend. Is it appropriate? Already I discussed the answer with you guys. Whatever loan is given to Shyam, that is definitely deemed dividend to the extent of accumulated profits. Since the profits are 9 lakhs, the deemed dividend will become how much, my dear friends? 5 lakhs. And the other part, the advance which is given to Shyamlal, I clearly told you that it is a business advance, so it is definitely not regarded as deemed dividend. So 5 lakhs, that loan is a deemed dividend, and the 2 lakhs is not a deemed dividend. So that works out to your option. Both are deemed dividend. No. The answer is option T, my dear friends. The loan will be taxable as deemed dividend, but the advance given to Shyamlal will not be treated as deemed dividend since it is a business advance.
Okay.
Yeah.
Right. So now, yeah.
That's it. Go ahead.
Yeah, go ahead, right? Okay.
CFO states that interest paid to MSME vendors is allowed as business expenditure and should be reported according to the tax return. I already told you that as per MSME Act, they have a section called Section 23, which clearly says that interest paid to MSME vendors is not allowed as deduction. Once an act says that it is not allowed as deduction, it is as good as a penal in nature as per income tax provisions. So we cannot take that as deduction. So the answer is option C, my dear friends. Interest paid to MSME vendors will not be allowed as deduction as MSME Act specifically prohibits such deduction.
Yes, so a lot of you are having a doubt. This will be available after the meeting. Okay. So you can go back and watch it. The idea to have a live discussion is if you have any questions on how to approach, how to prepare, that is what we are trying to address here. Okay. So unless we have a comprehensive view and we are able to handle different subjects together, this paper will become more challenging. And if you see, if you know some concepts, you will actually be able to score very well in the MCQs because answers are there, questions are there. Even if you vaguely remember something, you will be able to manage that. Descriptive, we will need some more practice. Okay. Now, moving on to the next question, that is question number 3. As per Ind AS 103, what is the date of acquisition of P&T Private Limited by M&A Private Limited for the purpose of business combination? Right. Now, effective date they have said in the question, if you go back, it is 1st of January. And while while reading the question itself, we have figured out that control is obtained on 1st of March. So control is 1st of March. That is the date. There is no choice. We know under Ind AS there is no choice. So it has to be 1st of March. Why not 1st of May? Again, if you have solved enough number of questions of business combination, you know final payment of consideration is irrelevant. What is relevant is date of the acquisition of control. So we'll apply that concept and it will be 1st of March. Then 4th one, compute the amount of non-controlling interest of SAYS Limited as on 31st of March of 2023. So what I'll do is, I think I'll because I don't have a writing thing, some connectivity issue. So they want a non-controlling interest of SAYS Limited as on 31st March of 23. Okay. Now, just come back to the question. Yeah. 70% share capital was required. This acquisition was made on 31st December 23. So I think they meant 31st March of 24, not 23. See, now don't cry in the examination saying the question is wrong, No, acquisition was made on 31st December of 23. So of course, non-controlling interest, we will be able to calculate only for 31st March of 24. So we will assume there is a printing mistake. And based on that, on 24, so 15 crores, 70%. So let me just, let me just share one quick working so that this will help you. So we have share capital of 15 crores. Of this, we own 70%. So 30% is non-controlling. We need non-controlling, right? So this will be 15 into 30%. Share capital 4.5. Then 5 crores is preference share capital. Now please remember, preference share capital has a different percentage. 45 is controlled, 55 is non-controlling. So 5 crores, whatever we have there, into 55%. So 5 crores, 55%. So that comes out to 2.75 crores. Then balance in statement of P&L for the year ended 31st March of 24 is 25 crores. So out of the total balance, part of that will be pre-acquisition. That is also our share. That is our share. From pre-acquisition also we'll have NCI share. And on post-acquisition also we'll have NCI share. So because they have not given fair value of NCI and all of that, we can directly take the P&L balance on 31st March, entire 25 crores. So 25 crores into 30%. Now, because information on dividend and all is not given, we will assume that dividend and all related aspects have been taken care, and that is the final balance. Okay. Otherwise, preference dividend has to be deducted and all of those things are there, but still. Then, PPE carrying amount is 3 crores, fair value is 6.2 crores, which means there is an upward valuation of 3.2 crores. Right? So, fair value adjustment, 3.2 crores. That is also an upward move. So this will go to NCI to the extent of 30%, right? Then on this, we'll have depreciation adjustment, but here they have not given us remaining useful life. So see, that is a problem. Now this, we cannot assume a specific thing and we can, we cannot do that. So if let us see what they have done in the solution. For depreciation adjustment, we need useful life. They have just said 0.1 crores. We don't know how they have arrived at 0.1 crores. Maybe they have calculated, considering the Companies Act provision, right? So with that, they have calculated 0.1 as depreciation. Okay, 0.1 as depreciation, and of that 30%. So 0.1, if we see, this 0.1 into 4, because 4 periods, divided by 3.2 if we do, this is coming to some 12.5%. So we have taken the 12.5% and they have done it. So we'll consider that for now, but in examination, we'll get that option and we'll see the total. The total is 15.71, and if I consider 30% here, that comes to 15.74. Okay. Now, if we come back to the question, what are the options available to us? 15.68, 12, 12.96, 14.75. So the closest one, if I remove this, the closest one is 15.68. That is the non-controlling interest valuation as on that particular date. Okay. So see, even if the depreciation information is not given, now here is a lesson for us. Even if the depreciation information is not given, B, C, D are far away. So even if I don't consider depreciation here, depreciation has to be a negative number. Okay. Even if I don't consider depreciation here, the closest one is 15.68. So if at all in examination you get this kind of scenario, you can directly do that and mark the correct answer. Then moving on to the last one, this is related to law, which ma'am has already discussed.
Right. So in this question, let's read this question quickly. Whether Anu has the right to appoint the alternate director in his absence. We've discussed Anu is the director and he's going away for 5 months. He wants to appoint someone else as the alternate director. We have already discussed section 161 that he cannot appoint someone else as the alternate director. Only the board of directors can appoint. All right. So accordingly, we'll have to select the relevant answer. Okay. So the first one says claim made by Anu to appoint Kumar as alternate director is valid. Okay, so this is absolutely wrong. Second option is claim made by Anu to appoint Kumar as alternate director is not valid as the authority to appoint the alternate director vests with the board of directors only, and that was subject to article of association. So that is a perfect answer. So B is the correct answer. But to be safe, you can also read the other two options. So we are going to read it quickly. Kumar cannot be appointed as the alternate director in place of Anu since his absence will be less than 6 months. This is irrelevant. D point, Kumar cannot be appointed as alternate director in the place of Anu since his absence will be more than 3 months. Again, it is irrelevant. So B is the correct answer here.
Okay. So then now we'll move to the descriptive questions. You will have a broader discussion. We'll not go into too much of depth of those discussion because answers you already know. Now, one more thing here to all the students. The answer given by the institute is pretty detailed and pretty long. And let me tell you, you will not be able to write such long answers in the stipulated time of 1 hour. So don't try to by heart. We cannot by heart 7 or 8 subjects. Okay. So definitions, yes, of course. Important sections, yes, of course. But you can write also in your own words. Now, I know there is this huge thing about institute will not give marks and all of that. So to be on the safer side, we should try to score maximum in the objective type questions. So even in descriptive, if it becomes difficult, if you are able to do well in the objective type questions, we will be able to do better to score more marks, right? Now, the first descriptive question, as Tanu and Manu are not well versed with Ind AS with reference to business combination, they want to understand about determination of acquisition date and ascertainment of control. Now, what they are asking here, this is more of a theory thing. Okay. Now, for theory and especially related to these aspects, what you can do is you can refer to my notes without the illustration. So that is actually pretty much summarized. So in about, I think 300 pages, 300 to 350 pages, all the Ind AS are covered in required depth for the examination. Okay. So that you can refer to, but please remember, you have to read them once, only then you should take it for the examination. Don't pick it up suddenly something and take it to the examination and you keep scratching your head, where is the answer? Okay. Now, determination of acquisition date. Now, as far as acquisition date is concerned, we know that acquisition date is the date on which the investor or acquirer obtains control over the acquiree. Okay. Normally, that is the date on which consideration is paid, but there can be a date before the consideration date or after the consideration date on which date we obtain control. So the entire accounting as per Ind AS 103 should be done on the acquisition date only. Okay, so that is the part related to first part. Then ascertainment of control. Now here, when they say ascertainment of control, we have to define when does an investor obtain control over the investee. Now, when does it get? We have understood the concept of that whenever, and please remember, control concept is given by which standard? Can someone tell me? In which standard is control defined? Let us see how many of you remember. 110. It's not in 103. Acquisition accounting is 103. This control is given under 110. So as per Ind AS 110, when an investor is exposed to or has rights to variable returns and has the ability to influence those return or affect those return, then we say there is control. So we talk about power, the right to variable returns, and ability to use the power. Right? This, if we can explain, that would be sufficient for you to score marks in this particular case. Now here, if you see, there is a, my observation on the case study. This 6, 1 and 2 actually is not about business solution. I'm not solving anything here. This is more about testing my knowledge, which I think sadly, institute has been doing this, still is memory based. Okay. If they had said, or if they had given more complex question and given more on that, how to determine and how to ascertain control, that would have been a different thing. But here again, it is more of testing memory, which I don't, think should be tested in a case study paper. But if the question is asked, we cannot say we will not answer, right? So we'll have to be prepared for the worst and hope for the best. Okay. So next question is for Companies Act. So ma'am will take it through.
Okay. So question 7 reads, the CFO believes that a loan to the director is prohibited under the Companies Act. can M&A Private Limited extend the proposed loan to Shyam? Comment. Now, here, if you know the Companies Act, there is a very specific important section on loans to the director, which is section 185. Okay, so you directly have to jump into that section and decide whether this company can give loan to a particular director or not. Now, please note here, this company is a private company. Now, throughout, whenever you're solving a case study, whenever you see a private company, just to be more careful, always check the exemptions. Always check the exemptions because private companies generally have exemptions. Okay, same goes for Section 8 companies also, in case you find them, or Nidhi companies or government companies. Okay, so let me tell you what is in section number 100.
Shall I share the section content of the answer so that students can read that as well? You're muted, I think.
Yeah, I wanted to share the screen.
Yeah, that is fine. Yeah, you can share the screen. No.
Yeah.
You're unable to share?
Yes. You think, am I visible? Is the screen visible?
Yeah, visible.
Okay. So see what section 185 says. See, it simply says that no company shall directly or indirectly advance any loan, including book debt, to give to the particular director, or to give guarantee to that director, or to give security in respect of any loan to either the director of that company, or can be the director of the holding company, or can be partner and relative of such a director, or a firm in which such director or their relative is a partner. So we simply understand that to these people, we cannot extend a loan. The company can never extend a loan. But there are exceptions. So I'm not going to go into the details of the section because the section has got a lot of content. So we are going to simply jump to the relevant part. The relevant part is the exemption. Okay, so we have got some exemption here. So see, section number 185 is not applicable on 3 types of companies. Again, all these 3 types of companies are again not relevant for us with respect to this particular question. The only relevant part is the private companies. If suppose there is any private company that satisfies 3 conditions. First condition is that no other body corporate should have invested in the share capital of that company. Second condition is borrowing from banks and public financial institutions should be less than 2 times of paid up share capital or 50 crores, whichever is less. And third condition, no default in repayment of these borrowings as of now. Okay, no subsisting defaults should be there. If all these 3 conditions are satisfied, then such a private company is exempt from this provision. So that means such a private company can give loan to its director also. Okay, so now in our particular case study, we had discussed that this particular private company is self-sponsored, it has got no loans. Also, we have not discussed at all that any body corporate has taken up the share capital of this private company. So clearly this private company falls into our exception. Okay. So accordingly, section 185 is not going to be applicable. Accordingly, the company can extend the loan to its director, Shyam. Okay. So this is how the answer has been framed, but the answer has also got an alternate answer. Okay, which I'm not quite accepting of, but I'll still explain that answer to you. Okay, you can read the answer. So that answer talks about the second part of this section. See, section number 185, subsection 2 talks about persons in which director of the company is interested. Okay, so the company can extend loan to a person in which the director of the company is interested. Okay, now what is person in which the director of the company is interested? It can be a private company in which such director is a director or member. It can be a body corporate in which 2 or more directors hold 25% voting power or more, or it can be a body corporate which is managed or which is accustomed to act as per the directions of the lending company. Okay, so this is the definition or the meaning of person in which the directors of the company is interested. Right. So now the alternate answer which is given, it says that if suppose the director, which is Shyam, has got any additional private company in which he's a director, okay, then such a private company can be given loan to. Okay, but in our whole, so like if that is the scenario, if suppose Shyam has got any other private company or a body corporate, such like which we can consider as person in which the director is interested, then of course the company can extend the loan to such a private company, but we do not have such private company. So you can ignore that answer, stick to the basics. The basics say that Section 185 is not applicable on a private company which satisfies these three conditions. Okay.
Yeah, so that's it. Then moving on to the last part, a pretty simple question. I'll not be spending too much of time because that is a simple, straightforward question from Indies 115. The CFA wants to understand how to record the revenue at the end of 7th year as per Indies 115. Now, here, please understand, it is a series of performance. We will follow straight line method. Now, what has happened is we have recognized revenue till 6th year. For 7th year, we have not recognized revenue. In the 7th year, now the consideration is changed to 2.7. And subsequent periods, there is a total revenue of 16.8. How will we recognize revenue in 7th period? Simply 2.7 plus 16.8 divided by 8 years. Now, this standalone price and all of that 2.1 lakhs is not required here because here we are not doing any contract allocation. If it is a series of performance obligation, then we'll simply follow straight line method because there is no other basis which is given. So you'll take 2.7 plus 16.8 divided by 8, whatever is the number, that will be recognized in the 7th year. And then you can give a note on how that is done, right? Now that covers the part of this case study. We did it, discussed it, but it's not that, we'll be able to write also in this time. So we have to increase our reading speed so that we can read the case study faster. That can happen only with practice, especially for students who have this thing about understanding English takes some time. Okay, especially if you fall in that category, please ensure every day you are reading some, good English newspaper where you are able to understand the essence fast, because the case study may be new, which you have not read earlier. So unless you are able to read it faster, you will not get sufficient time in the examination. Now, it is open for questions. Someone has asked a question, how to eliminate one question in 15 minutes reading time. I think by looking at the MCQs and also the quick look at the description, you should be able to figure out that, okay, these descriptive questions I will not be able to answer, or these descriptive questions I'll be able to answer better. And then you can do the elimination. Any other questions you can ask, and we'll spend another a few minutes from each one of us telling you exactly how to, prepare those aspects or those topics for your respective examination or respective, subject for that matter. If you are concentrating on group 1 only, can we give paper 6 for scoring an exemption? So I think, so if you're not writing group 2, Shiv Teja would be the best person to answer, because paper 5 and paper 6 is his category. So
yeah, so Vipin, I would strongly say that that's very difficult. The fundamental reason being very clear. When you wrote your CA inter and then come into CA final, there's a lot of disconnect and the time gap which has come out for the taxation subject. And at the same time, the level of content of direct tax, indirect tax at CA final level is altogether different. So with concentrating only on group 1 and scoring exemption in paper 6 looks very much difficult, because almost majority of the case studies will have questions on taxation. So I think it's a slightly tough decision to take up.
And also understand that they may ask question on strategic cost management also.
Yeah, exactly.
So the thing is, this is one point where I don't, subscribe to what institute is doing. They have said you don't write SPOM in May 24, but we will test you on SPOM concepts in May 24 itself. So that is one thing which I find it. But the thing is, what is there is what is there. We can't do anything about that, right? Written notes are allowed. Which books are to be carried? Okay. Now, if you carry your study material, you have to book a, I think, what do you call it, trolley or a porter who will carry all the books, because if you carry CA final study material, someone has to carry it, right? One person cannot carry all the study material. So what you have to do is, for some subjects, and I'll talk about my subjects, then Shiv Teja will talk about his subject, and Nikita will talk about her subject. For FR, if you ask me, something like inventory, cash flow statement, or something like, some standard based on, let us say, your events occurring after the balance sheet reporting period, what we understand, right? Something related to, let's say, investment property. These are simple standards. All of you know these standards. Broad concept. I'm not saying nitty-gritties of that. Broad concepts of Ind AS 2, Ind AS 41, Ind AS not 40, Ind AS 40, then government grants, then aspects related to, let us say, your, things around intangible assets. These things, borrowing cost, they have very few concepts. See, standards are big, but all of you know them. Okay. Those part you can, if you want, you can eliminate them because we have to reduce what we have to carry. When it comes to specific standard like 115, leases, financial instrument, business combination, consolidation, again, business combination, consolidation, the theory part, which you can summarize and you can. So if you already are referring to some notes, if you can make copies from that, or if you can write down your own summary notes, that you should be carrying as far as FR is concerned. I do not recommend carrying the entire set of Ind AS and taking it to the examination because that will not solve your purpose. Okay. Now, because we have only 3 of us are here, when it comes to audit also. Audit, it will be more on professional ethics. Okay, summaries of standards on auditing, that should be more than sufficient. Then strategic management, the business models or strategic management models that we have understood earlier. Okay, now another thing, don't pick up what someone else has prepared. Don't take your friend's notes and go to the examination because that will not solve your purpose. You will be losing out a lot on your time, right? So that is one thing. Then moving on to law. So Yogita, what suggestions you have for them to carry?
Okay, so I think the simplest, although it's going to be tedious, but the simplest way is just make your notes. Okay, sit with the book. Anyways, you have to read the whole book. You have to study every section. And because you need to have understanding of the concepts. So maybe just prepare your own notes, absolute summarized version, but these notes have to be indexed. Okay, like you have to have an index of every chapter, every section, and individually when you're making notes for the chapter also, you need to have page numbers where the sections are mentioned. Once you make these notes will maximum be 250 pages. It will require you to spend that time. You can copy paste other people's notes also if you want, but then I want you to be caution, like I want you to be careful and check whether they are correct or not, and check whether they are mapped out and indexed. Okay, like if I ask you to search a particular section, you should be able to quickly go on to that particular page and point out. And then every section should have small details like we discussed, like prohibitions are there, exemptions are there, restrictions are there, all those things have to be mapped out. If you can write down that, one time reading will be done, and it might take you 10 days though, but it will be very useful. You can just refer to those notes henceforth.
Okay, yeah, you can. So Ravi Teja is asking a question. Summarized notes, yeah, I think summarized notes will be sufficient, but I think you have to be careful in subjects like law and taxation, where where let's say I think Shilteja would be better to talk about DT and IDT. Let him complete first. Then if I have something else, I'll add on to that.
Yeah. So with respect to taxation, I would strongly suggest that your notes, what you prepare on your own, will make a huge difference. Of course, topics like PGBP, capital gains, that will anyways be in your control. But especially areas like appeals and revisions, penalties, TDS, where too much of content of rates and time limits are involved, I personally believe those have to be summarized by you and carried to the examination. And when it comes to GST, those areas where it's more of a description part, I think that need to be carried with you. But anyways, topics like ITC, value of supply, place of supply will definitely be in your control. And I don't think after finishing five papers, tearing the study materials and taking relevant topics will work, because you really don't know what are the relevant topics. Anything can come in the examination.
Any study material? So we have some notes what we have provided for FR, SFM, indirect tax and all of that. You can make use of them. So what you can do is, see, our suggestion would be whatever notes you have been preparing for the respective subject. Okay, that should be the basis for you. If that note is already concise, then you can take that note itself. Okay, if that notes are very bulky, then you can extract relevant parts from that and then make a note separately for this strategic, business solution. For Companies Act, if required, if it's possible, you can buy the Bare Act if it is thinner. Okay, and I think we can take referencer for direct taxes, income tax ready reckoner. What we get that can help, maybe. I thought. What is your opinion, Shivteja?
True, very true.
Because that is slightly thinner. Instead of carrying something like Singania, you can take ready reckoner, which can quickly help you to get the sections. Right?
Exactly. But you should not be somebody who's new to that reckoner. You should have a basic idea as to where
how
that
it works.
content is there. And since you guys have done your internship, and I'm sure everybody knows what is Reckoner all about.
Okay, all of you have done it. Whether I can cover SCMP and law due to time crunch, will it impact my paper 6? And whether lectures for SPM will be given before exams? So Vinith, valid question, but Institute has so far not yet come out with when they will release this lectures. And that is what is concerning for us also. But nonetheless, whatever you can prepare, at least with 5 papers of good preparation and some preparation of law, whatever to the extent you can give, I think you should go ahead and appear in the examination.
And my last point to add from my side is that one way this is a very wonderful paper to score your marks because it's a mix of combination of altogether all subjects put together. So I believe that, and I strongly have a great gut feel that this paper is a very scoring paper. That is what is a positive way you have to look at this paper as such.
Do we need to concentrate too much on costing? No, not too much on costing. Okay, so costing is the basics like your aspects around. There's a concept on balance scorecard, performance measurement part. Then we have concept on transfer pricing. Those are the areas, and where some part of standard costing formula. Those are the areas we should concentrate more, not on everything. Okay, so the balance scorecard part, the performance management part, that part you have to focus more. Highlighted materials, yes, I think they are allowed. You can take the case study digest, but the problem is, so very valid question. Earlier, what used to happen is when we had the 6 selective papers, they would reproduce the same question in the examination. But now, because it is integrated, and one thing that has concerned me is, or has scared me actually, I should say, in the student journal, the case study that they have given. Now that is a very different case study from what is given in the case study, available on the website, right? So now that part. So then I checked with the, a couple of, people in board of studies. I like, are you going to test on specific industry? They said not really, but students should be aware of industry. So broad idea, not everything can be learned, but have broad idea of things that are going around, and basically business thinking is what would be needed, right? So that is what you have to do. So don't concentrate too much on costing. So now T company, now if they give a question on T company, I may not know T company in the examination, right? And while selecting questions, you have to be careful as to what is to be excluded in the examination. Shivteja, Yogita, if you have to add some more concluding parts, and then I think we can close the session unless students have more questions. And yes, thanks a lot for students to joining, being with us for 1.5 hours. And yeah.
That's it. Thank you so very much, guys. Thank you. And since that we are all combination of multiple faculties involved with us, anytime you can reach out to us, we'll be more than happy to guide you with respect to integrated business solution paper, which is a match of all subjects put together. So don't take this subject for granted, but at the same time, don't take too much of pressure since that all topics are combined together. It's a good area for you to score marks. So I wish you the best. Wish you all success from entire team Indigo Learn. Over to you.
Yogita, just a moment. So one more question. Can we expect anything out of the syllabus? So to be frank, yes, you can expect anything out of the syllabus in other subjects also. Because when they say income tax law or GST, they can ask anything from income tax law, which is not given in the study material also. They have the right. And when we were students, in fact, when, 10, 15 years back, they had asked questions on a lot of FAQs issued by the department also, which we were not even aware of. Okay. But out of syllabus question will not be more than 5%. So forget that 5%, focus on 95%.
Correct. That's the reason why I think Suraj has strongly suggested about Ruddy Rickner, which makes more sense.
Yeah. Okay. Yeah. So Yogita, concluding remarks from your side as well.
Yeah. So see, once you become a CA, you will be expected to do this. You will be expected, clients will come to you, they'll give you a whole scenario and you will be asked to solve questions and you will be expected to know things from all the areas. So it's kind of a practice for you all in that respect. Also, I know this paper is open book, but please do not think that you can just go with the book. You need to study, okay? So you need to have understanding of all the concepts and everything. Just taking a book will not help for any subject, okay? So that subject will become weak, all right? So those were the 2 points I wanted to add, and thank you all for joining, and this was a great session.
Yeah, thank you everyone. Thank you, Shivteja. Thank you.
Thank you.
And thank you all the students for bearing with us for this 1.5 hours. So try to solve all the case studies a couple of times, and reading is very, very important. And don't get scared with fancy English. Okay, all this fancy English, don't do it. Can we expect to release other live sessions? We'll take a call based on the feedback from the students who have attended today, and then over the period next week we'll see whether we can come with more structured approach for solving case studies along with the students. We'll let you know on that, definitely. Right? Chalo, thanks a lot, and I hope it's dinner time for a lot of you. Please enjoy your dinner, sleep well, don't take tension, things will work out.
Thank you so much, guys. Bye-bye.
Thank you. Bye.
Suraj, thank you, ma'am.
Yeah, thank you. Thank you, Megita. Thank you, Shwetaja. Bye.
Thank you.
Yeah, bye-bye.